First question on everybody's minds is, when can I get more for my money in the bank? Do you guys move right away to up those deposit rates?
Yeah, we move. It's really a broad process depending on the type of account, the markets, and what the competition does. But you'll see us move rates as we have as we go in other rate hike scenarios. But the good news about a rate hike scenario, it shows that the economy is still going strong, and that, at the end of the day, is good for banking, good for our customers.
Yeah, still it's pretty low what people are getting for their money right now. Do you think the competitive landscape, we were just talking about how you can get 2%, for your money for 6 months on a CD right now. Is there starting to be a little bit more of an upward bidding war there?
Well, I think if you think about the last year and a half or so, you've seen as rates rose, people have looked for alternatives of higher rate yielding for money that they're storing and investing as opposed to money in their transaction accounts. And so it really determines the type of customer, the type of account. But the goal is to provide great services, of which the rate and the capabilities beyond that, whether it's digital capabilities, mobile capabilities, investment capabilities, investment advice, is really the key to it. So we've enjoyed good success as rates rise, and we will continue to do so.
I want to ask you about some news this morning on Venmo. The banks, you're all trying to kill Venmo. And eMarketer says you might be winning in that regard. They said Zelle, which is the bank's peer-to-peer platform, they expect it to overtake Venmo in terms of U.S. users this year. What accounts for this rapid growth?
Well, it is an industry a view that we had to create a better experience for our customers to move money to each other, frictionless, embedded within our app with our safety and security directly from their account. And one of the unique things we realized is between the assets we had, a couple of different companies that we operated as cooperatives, we were able to put those together and bring out Zelle. And what Zelle gave us, because the instant connectivity of all those members, and the whole industry will have access to it, you basically can connect all the banks through a cell phone and email, and it's very simple and easy to operate. So we're seeing 100% per year growth in P2P payment transactions at Bank of America. And our peers are seeing also growth, and it's just rolling out. And so as people get more and more used to it, it's embedded in the app. We think it'll be a great service for our customers. And what we're trying to do is give our customers the safety and security of our bank account structure and the transferability to anybody by having those two pieces of information.
And I wonder, is it millennials who are largely using that, or is it people of all ages? Is the take-up rate pretty good?
Well, I think if you think about something like Zelle, it is across the board, and always any of these digital products or mobile products obviously have cohorts that are higher usage among younger people. That's just the nature of the business. But if you think about our mobile banking, our digital banking, we're at 35 million digital customers, 25 million plus mobile customers, and we have 50 million customers, so we're penetration rates where really everybody is using it, and we're seeing Zelle broaden out. My friends have learned how to use it, and they're sending money to me using it today, hopefully every day, and that helps. But you're starting to see it be adopted as people learn how easy it is. We do have an effort with our student accounts, and as we open accounts, we embed it as part of the relationship management process with those new kids coming in and opening their accounts to go to college or go to high school, and make it part of that outcome also.
I'm trying to think what you and your friends are Venmo are using Zelle for. Is it you're splitting golf fees, or what? Picking up lunch or dinner for each other, or what? What are you using it for?
Well, if it's golf, it'd be me paying them, so that'd be clear. So the interesting thing is, in the end of the day, our generation was used to using checks, and so when you had something that somebody had to reimburse you for, tickets to a concert or something you did together, teach them, say, just send it to me through your bank to my cell phone number, and it's there. It's wonderfully simple, and once they do it, it just has a network effect, as the gurus would call it, but it really just has an ease of use. It's tremendous. But it's on the backs of those 25 million digital customers and 35 million mobile customers that, half our money today moves digitally at Bank of America by consumers. And that's already there, and we're just driving that largely because of customer convenience.
I want to ask you about the big news of the week that we were just talking about with this Comcast deal. But the Department of Justice has said AT&T can go ahead and buy Time Warner. Again, now the Comcast Fox pursuit is showing just how much more deal making might be in the pipeline. You guys kind of rubbing your hands at that? You think it's going to lead to a big pickup in investment banking?
Yeah, it should. And there are a lot of deals that in this particular industry, in this segment of industries, that we're testing the question of competitive combinations, and the clarity of the decision yesterday allows a lot of ideas to get to the table, and you see one of them today. And so we, our bankers will tell us a lot of people are sort of waiting there for the outcome of this decision, and they'll move forward. And it'll be a fun time to be an investment banker, frankly.
Yes, I'm sure they're excited to feel the floodgates are open. You think that's going to be a strong part of your business? We have that. We have obviously the trading environment. People are still watching very closely. And just are you getting pressure in general to ramp up the risk taking to improve your profitability like some others are?
We, at the end of the day, we take the risks that our clients need us to take. And as you look in the first quarter, our risk was consistent with where it's been for 8 or 10 years. And we continue to make more loans. So obviously we're taking on more risk by having more loan outstandings, growing loans every quarter. We're growing deposits. Again, that means you're taking on more transactional and operational risk. And then in trading, the idea is that Tom Montag and the team put $600 billion of balance sheet in the market every day to help support capital formation and capabilities, and they do a great job. And we've been able to manage the risk because really we focus on doing what our clients need us to do as investors or issuers. And so we didn't lose money any trading day in the first quarter, and the business continues to be solid. But we don't push it just to make money. We push investment banking to really meet the market's needs and not go too far. It's kind of the philosophy we have for responsible growth that's worked well for us.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.